Capital. Let's connect with Nitin Raija, Chief Investment Officer with AQ Advisors. And today is the last but one day of the futures and options expiry. So to understand F&O trends, we'll also connect with Amit Trivedi. Nitin, let me kickstart the discussion with you. The month of November has been a choppy and a sloppy month for Indian markets. Even though index has done precious little, the market breadth is looking quite impressive. How should one invest in this kind of a market?
Nikunj, very clearly in the lack of absolute certain macro clues, I think this continues to remain, in our view, a market where stock picking is at a premium and bottom up is the approach that you should be following. And that is demonstrated by the market breadth, and that's demonstrated by the fact that if you see the mid-cap index, it has been actually doing reasonably well as such. So, and let's not forget that we had a great October when the markets had a fair run-up. So I think here on, I think what the market is probably looking for as the next cue is, in my view, is really the election results, which might give it some sense of momentum. Although I think a lot of it, I would want to believe has been already factored into the markets as such, and there is a very little scope for disappointment. So if the election results kind of really disappoint, and it's like a 2-on-2 for the NDA and so on and so forth, so you could see the markets pulling back from here on.
Nitin, hi, morning. What have you made of the Ken India buyback price? Of course, it's at a 3.5% premium to the current market price, and thereby what it entails for Sesa Sterlite, because that seems to be a bigger beneficiary being the parent.
Sure. So I think Kane has always been on the buy list for most people. The stock has been the stock price has really been not moving, more due to the regulatory and concerns that have flowed over it in terms of getting permissions for increasing their production capacity and so on and so forth. But I think some of it is behind, and there is a lot of cash that the company is generating. So it's from a management perspective, it makes immense sense for it to do this buyback, considering the amount of cash that the company is throwing out. So we've been positive on Kane, and we continue to remain positive on Kane going back.
Fair point, Nitin. I guess there are two ways to look at the Kane buyback. Number one, what is there for a trader and what is there for the investor. For the trader, there is nothing on the table because the buyback price is at 335. There is no premium. But for an investor, you're absolutely right. EPS goes up, cash comes down, and the Kane overhang will also get cleared. Amit Trivedi, how should a trader approach Kane now that the news is in the system?
Hi, good morning, Nikunj. So what we feel is, as a trading opportunity, upside seems capped for the moment. But because you have a buyback price, downside also seems to be capped. So one can go and sell puts of Kane India around 5% lower from here, because we don't think in the near 1 or 2 months the stock will go down below current levels.
Nitin, for the moment it appears that IT is taking a back seat. But do you think it's a matter of time IT stocks will make a comeback, because globally growth is still precious, and the advantage with IT is that IT companies still offer visibility and decent amount of revenue growth?
So very clearly, I think, after the kind of run that IT companies have had, they are taking a breather at this point of time. But as you, for the very points that you made, these IT companies seem to be the only area where visibility is the highest at this point of time in the markets as a sector, and I think they will continue to be an integral part or a dominant part of the portfolio, for most companies. I think there is some amount of value that is yet to be seen in some of the mid-cap IT names, which have actually benefited, but where the valuations yet kind of lag.
Amit, what's the sense that you're getting about the most volatile of them all, United Spirits yesterday? Does one go about trading this one?
Just from a trading perspective, I think it's best avoided, because it's all over the place, moving 7-8% up, down, everywhere. But if in the near future, because of which the option walls go to around 48% or so, was currently around 37-38%, then definitely you can sell the straddle, and whenever the price becomes around 220 of that particular straddle, so call and put together. So as this price should come down to around 150, 160, I would not use futures to trade them because it's been quite volatile per se.
Nitin, how would you approach United Spirits?
Well, clearly, if you look at it just on a very simple valuation basis, you probably know you're going to get deterred by investing into it. But I think a couple of things happening there, which we are all aware of in terms of the possibility of the debt overhang reducing. There is an internal change. So you want, in terms of earnings, in the next couple of quarters, I think 3-4 quarters, probably you will not see earnings growth. But I think a lot of people are playing this out, really looking at it as a 3-4 year story in terms of what the premiumization that can happen, the interest going down, and then basically looking at this company, just from a perspective of what is the value of the sales that it does in the market at the retail end, and then comparing it to its market cap. So, and clearly there are some very strong hands in terms of investors who, whether it's the form of mutual funds or whoever, who hold the stock. So you really don't see the stock coming off dramatically. I mean, yes, you do see it going down, as we saw recently, to 2,300 post its results, but then it kind of bounces back. So I think you might see it trading in a range a little bit in the shorter term, where that range could be as big as 2,300 and 2,600. And if you're a trader and you can call it right, there is some amount of money. But I think most people are really looking at it now as a far longer term call than looking at it in the shorter term.
Amit, how exactly should Nifty traders or traders position their portfolio for the first half of the December? Because we are pitted against an important outcome, which is the outcome of assembly election, which really could be a big swing event for Indian markets.
Yeah, so if you look at it, yes, elections are number one thing, and in middle of December, which is around 16th or 17th, you have the Fed coming out and discussing on its Fed minutes and things like that. So we expect volatility to be there in markets. What clearly we can see is upside in the market is capped. So just from a pure option carry strategy, one can buy 6,400 calls and sell to 6,500 calls. You get around 8 rupees of cash inflow in the strategy, which is 400 rupees on a margin deployed of 20,000. You make at least 400 rupees if Nifty remains any value less than 6,600, after which if it goes above that, you will start making losses. If market remains here or goes down anywhere, you will make that 400 rupees per se. In fact, if market goes up to 6,500, that will be the place where you will make maximum profit of around 108 rupees, which translates to around 5,400 rupees.
Right, Amit. Appreciate your time and thank you for joining us. Nitin, you track the entire NBFC space with a magnifying glass, and you've been hot on Mahindra and Mahindra Financial along with Bajaj Finance. Do you still like both these stocks? Because both Mahindra and Mahindra Finance and Bajaj Finserv, they have seen an extraordinary run-up.
Sure. Mahindra Finance is obviously, touching new heights. And when we look at the valuations, I think, they seem to be in a pretty fair zone at this point of time. However, Bajaj Finance, we continue to like, because although it has run up from the bottom, really if you see, it is nowhere close to its highs. The stock had gone up, I think, all the way up to 1550, 1600 odd range. And then it collapsed all the way down to 1,000 when you had this sell-off in July in the banking and the entire financial space. So at this level, its valuations yet continue to be pretty fair, given the kind of growth that the company has been delivering and has been, broadening its entire business. So of the two, we like Bajaj Finance, while we think Mahindra Finance is now in a fairly valued zone.
Nitin, so as the year unwinds and traders would rush in to lock some gains, do you expect money could move out of cyclicals, especially names like L&T, Tata Steel, BHEL, some of the key cyclicals and metal names which have seen an extraordinary run-up in last 1 month?
You know, these stocks are driven more by optimism right now and the fact that, they were trading at cheap valuations. But I would think that, if you have a bout of profit taking, you could see some of that also come in sectors where actually big money has been made. Sectors such as IT, sectors such as FMCG, and so on and so forth. So, on the other hand, if as I said, the election results turn out to be positive for the NDA, then you could yet see these cyclicals, move up. Because I think typically, if you look at this market, Nikunj, what has really happened is that it has been a broader market. But if you look at the Nifty or the index stocks, the larger cap names, there is one end of the market which is trading at very low valuations, and there's one end of the market which is trading at extreme high valuations out there. So I think in the case of a positive result, you could probably see this end which is trading at low valuations participate and yet move up from there as such. On the other hand, I think if the results turn out to be a disappointment, at least in the short term, then the case where you talk about a lot of these cyclicals getting sold out and the markets correcting broadly could be the scenario that could play out.
Nitin, the other stock which I want to discuss at length with you is BHEL. The stock has seen a mesmerizing move. It is up more than 45 rupees from the recent low, and this has happened on back of very poor and disappointing set of numbers. What BHEL has reported for the quarter gone by is absolutely disastrous set of numbers, because margins have contracted from 11% to only 7%.
Sure. So I think, Nikunj, the case with BHEL is very clear that, if you really look at the business in the shorter term, you look at the kind of order book, you look at what is going to happen on the power sector in terms of incremental capacities and orders to be placed. So the outlook really does not look very positive for BHEL. But what happens with the stock price is a different story, Nikunj, because we've seen stocks either get euphoric or they get overly pessimistic. Ultimately, there is some value ascribed to every company, which is intrinsic to its business. So I think BHEL had got sold out so much and had gone to a level where there was intrinsic value. So you probably saw two things. You probably saw some amount of deep value kind of buyers coming in, hoping for some turnaround. On the other hand, also we've seen a lot of these infra cyclicals like L&T, BHEL, who've had run-ups from their lows on optimism that the economy will bottom out and you will see the investment cycle start, and markets typically try and preempt that and try and discount that.